American Express, we got Verizon, and we'll touch a little bit about a potential UN backed deal. Get the thumbs on up. We also got the cow guy is here. He's going to be here. So give me a thumbs on up if you guys are excited for the cow guy, and let's get pre-market prep started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, let's bring on Dennis Dick and let's dive into the overnight action. Just want to kind of show you guys really quickly. We did touch there into the 4,000 into the futures. You can see here we got a high there of 4,004.75. So
we kissed it.
On up
that
there.
Was their target.
We kissed it.
That was your target. It was kind of my target too. I thought it was going to be that we could eventually see 4,000. We saw it in the futures, didn't see it in the cash. Remember, with the time value of money now, they used to be the cash and the futures were almost the same. Not so fast because there is time value of money all of a sudden. So obviously cash less than the futures. But just jumping in, I mean, we've had a big run. We've moved a long ways. Does that mean we just turn around and sell everything? I don't think so. But I think if you got swing trades on, I think you're lightening up into this. I think it's been an impressive move. And we just got to, it's a trader's environment. We're in 2022 still. We're still in a bear market. Did we see the bottom? I think we did in a lot of stocks. But we've moved a long ways very, very quickly. So I think you're lightening up into it.
Yeah, and I mean, just kind of, we don't point out too many indicators, but we are starting to get to that point where I think, you're getting into a shadow fill, right? We've seen a lot of shadow fills sometimes reject, so we're going to see what happens here. I think you might get some boosts coming in, but of course, why are we down overnight? It was a lot because of the snap and the Seagate weighing down the market after disappointing earnings. So I'd ask you the question, Dennis. How is the SPY holding up with such high considerable damage?
Yeah, I know, and we're going to get into that damage. And I'm very impressed with how as well as S&P is holding up. And what happens is when you've got the buy the dip mentality back in the market, you see, obviously stocks dip, and we're getting some buy the dip on stocks that are beaten up, but not snap. But we're getting some green showing up in other pockets. So this is what we kept seeing during the 2021-2020 bull market. Even when we'd get bad news in a sector, other sectors would just go heavy green. And if you look, it looks like it's going to be the financials that might help us out here this morning. You're starting to see some of the banks go green. The banks themselves are trading in the red simply because TLT is trading higher. But if you take it outside the banks, the other financials, American Express reported here this morning, we'll talk about them in a second. They're trading up $6. Then you got MasterCard and Visa. You've got some other tech stocks that are trading higher here too, like Apple and Microsoft, because they're not directly impacted by what we saw with the chip wreck from Seagate and what we saw with Snapchat with online advertising. So let's jump into those catalysts though, because this is why we were getting hit really hard last night, but we're finding buyers, at least in the overall market this morning.
That we are. Let's get out of the futures in the overall market. Let's dive right into our earnings talk because this is definitely going to be on everybody's radar. We got a bunch of earnings to go through. I'm going to have the numbers scrolling for you at the bottom here. You guys can take a look. Let's first dive into none other than the leading kind of report here that really shook up the market, which was Snap as they hit the bell after hours yesterday. EPS missing here at a loss of 2 cents, missing the a loss of 1 cent estimate. Sales were at 1.1 billion, missing the 1.14 billion estimate. Snap authorized stock repurchase program of up to 500 million for Class A stock, but it was growing at just 13% year over year, the lowest on record, and then no guidance given for Q3.
Problems. And I think, and I'm almost kind of mad at myself because you just think about how much TikTok is probably impacting Snap. And, I'm going to draw some more conclusions on here in a second, but let's just talk Snap. Down 30% here this morning, an absolute epic disaster, making new lows on the move. So the low of the move was down at $11.90. We had been up almost 50% since that low yesterday when it closed at $16.35. Boom. In one day, you're going to get the month of gains gone. Kaplooey, as Joel says I say, which I don't think I say it. We're coming back to 2020 lows. So we're not, we're ways off from the March 2020 low, which was $7.89, but we've come a long ways. I don't think you'd be a hero in Snapchat. I think you just let this one slide. Could they come in and buy the dip? They could, but they've had 8 hours to do it here now. 8 hours meaning, 4 hours after they reported last night, and then 4 hours here this morning in pre-market trading. Pre-market starts at 4 a.m. and it's just continued to leak. So I don't think this is going to be one that's just going to bounce back. I don't foresee this, doing something like a BBWI did the other day. Smaller stock, less volume. I don't think this is going to do a reversal on it today. It's just too big.
So no
and
snapback rally.
I don't think so. And obviously nobody knows anything. Could it rally up to $12 maybe, but it also could leak here too. I'd completely stay away from this one because one, not giving guidance, two, there's so many other problems happening here. But what I'm really interested in is the repercussions for the other online advertisers.
Yeah.
And we talked about this on yesterday's show. And I was saying that Snapchat will move the entire market for the simple reason, obviously with Seagate moving the tech stocks down too, but the simple reason here that Snapchat, hits other stocks is because they're the first major online advertiser to report. It's just where they line up in the earnings season. It's not that they're the most influential, it's that they're number one. So you're getting a glimpse. So obviously Snapchat, not good. They hammered Meta on this. I'm long Meta, full disclosure. I would buy the pullback in a stock like Meta, META. It's already off the lows. On the initial number, I don't know who in the hell, knocked this down to 170, but I saw it for a split second. It was like 174, and all of a sudden they just get me out, and they hit everything and went offered at 170 just for a second. I tried as fast as I could to buy the 170, but it was there for like a split second, and then it was like 173 bid. I was like, oh, that was way overshot, down 13. So now down 8, it kind of feels right. Could it get back down? If it got back down near that 170, I think I would be a buyer. I'm long the stock. Obviously disappointed that half of my gains from the last couple of weeks is gone just because of Snapchat. But I do think, you're going to find buy the dippers coming into the stuff. Google gets hit on as well. We talked about that yesterday, that Google would get hit on this. It did. GOOG trading down 2.5% because of Snapchat. And Google's not getting TikToked. So, I mean, you're getting... I do think, Snapchat's a Snapchat problem to a certain extent. So I own Google, had it in the long-term portfolio for a decade, not getting rid of it. So talking my book to a certain extent here, but it's my long-term book. But I think, on the dip here on maybe not so much on Google, but on Meta, because Meta had been getting hot. They're going to obviously report earnings coming up. I think I would buy the dip on it.
About Pinterest.
Pinterest is an interesting story because I just don't like the product. So, and we talked about this on the show probably a week or two ago. Joel was saying, how his kids aren't looking at Pinterest anymore. My wife never goes on Pinterest anymore. I just think it's getting TikTok too, to a certain extent, because that's what it is. You're fighting for that late night screen time on a lot of these things. People are sitting there before they go to bed. They're doing the mindless scroll. They mindlessly scroll. It used to be Facebook, but they don't do that so much anymore. Then they were doing Snapchat and, Pinterest, looking at, different things. There's still people that do that, but I think TikTok is eating some of their lunch too. So I'd be scared of Pinterest, although it wouldn't surprise me. You got great support down here at 18. So it wouldn't surprise me if this thing gets down 18 handle, low 19s that it finds buyers. So I would say I think there might be a buy the dip mentality. I'm more inclined to buy it in Meta. But Pinterest is a possibility as well, but I'm just not a fan of the product.
We'll get out of Snapchat. We'll go ahead towards our next big earnings that definitely rock some of the tech sec. Let's get out of Snap. Let's go to Seagate.
Holy
STX
mackerel.
here.
Yeah.
Seagate Technology coming in with an adjusted EPS missing here at $1.59, missing the $1.92 estimate. Sales were at $2.63 billion, missing the $2.78 billion estimate. They did see Q1 sales at 2.35 with a range of 2.65 lowering that from the estimate there, the guidance from 3.3 billion, adjusted EPS at $1.20 to $1.60 versus a $2.27 estimate for Q1. Definitely lowering there, and you could see it. It definitely affected the market.
What was very interesting was you got to be watching the news because Seagate halted ahead of this, so you wouldn't have saw the Seagate fall because they halted on the numbers, and then they reported those numbers like, oh my gosh, I'm like, they're gonna kill the chips. And Western Digital, which is a direct competitor, WDC, started getting hammered right away. So you got Seagate flat because it's halted, but they just reported disaster numbers, and obviously the guidance not good as either. So I'm like, man, I'm thinking right away, I'm like, Seagate's gonna open out like 10 points on this. So then you're looking like the chips, and WDC starts getting hammered, and AMD starts getting hammered, and Micron starts getting hammered, and Nvidia starts getting hammered. And a lot of these stocks have bounced back, but man, they were really getting hit on it. Western Digital, WDC, the direct competitor, getting hit the most. It's trading down 5% on this. The question is, the chips were really hot going into this. So now you get Seagate. Does that cool it all off? And people are like, oh, I better book my gains on some of these chips. Or is it a buy the dip opportunity? That's to be determined. So I don't know so much if I'm buying the leader on STX, but that's a big sell-off for STX as well. But the lower guidance, I'd probably stay away from that one. The question is, do they come into a Western Digital? Do they come into the Micron? Micron downgrade this morning here as well. I know, is there those buy the dippers that are like, okay, well, this is my opportunity here? I mean, they have to a certain extent already come in AMD and Nvidia because they were down a lot more last night, and Nvidia is only trading down $1 now, and AMD is trading down only 70 cents here now. So nice resilience showing there. Like I said, WDC, the direct competitor, but it was hitting all the chips last night. I mean, people look at this move in AMD. You know, obviously talking my book here too. I'm long AMD, but wow, $74, Mitch. $74.
Oh, I saw that. The
7 sessions.
It's really impressive.
It ran 15 points on a $75 stock. What is that? It's up 21%. 21% in 7 trading sessions. I mean, I can't buy it now. I'm in it. I'm like, my target would be 100 if I was probably swinging it. I put in the long-term portfolio, but it's hard to come in here and chase it now. But I like the resilience. I like the fact that they came in last night. And if you could show the chart from last night, Mitch,
yeah,
it was trading in the down to the 89 handle. Look how low it got. Look at that. Where did it get down 89? To? What was that low on the move on the Seagate number? 88
right here around
no
89.50. That was last
night.
Yeah, last night.
That's last night.
Last night. That's at 6:15.
I was looking at that tick from this morning.
Oh, you got an 89.51 at 6:20.
Yeah. So we're a buck up. We're a buck up from the lows. So, and again, they were hitting all the chips last night. And again, it's Western Digital that I always think about when I trade in Seagate. If I'm pairs trading, it's WDC and STX. But Micron was getting hit on this last night too. And then Micron gets the downgrade. I believe, if we go to the pros, I believe it's to underperform. I'm just trying to go check it out here. I saw it go by, and then I'm so busy with everything else this morning. Yeah, Micron downgraded at Morgan Stanley to underweight. So that's the equivalent of sell, obviously. So that hits a 2. What do you think, Mitch? Do you think they come in and they buy the dip in some of these chips, or is this the opportunity that they haven't really sold off yet, like the AMD and Nvidia, to like take some profits? What's your thoughts?
I think you have a stock picking environment now, and so with this one, I would say the leaders might continue to get some strength and some buy the dip. Like AMD, Nvidia, I wouldn't expect such weakness, but I think you might start seeing a little bit of separation today. Some of the chips coming back down, but some of them holding them up. So that's what I'm going to be watching. Of course, like if I see AMD or Nvidia just tank out the open, that'll give me the sign that, hey, be careful there. But I think those are going to hold up. You're going to have more of that stock picking environment where some leaders can still hold up versus some companies that don't have good earnings, don't have good fundamentals. We'll probably see them start coming back down and giving up some of the gains.
And again, we're going to go into earnings season here, so sometimes it's hard to make these bet on technicals when we're coming into the major earnings for all these stocks. I mean, next week we're going to get right into it, and it's going to be heavy. Let's cover a few more, and obviously, we've got the tech stock. So that's the bad news. The good news here is anything in tech that really, the growthy stuff's getting hit. But, you look at like a Microsoft trading in the green here this morning. You look at an Apple trading the green. You're like, wow, the QQQs are trading down, $1, and Microsoft and Apple are in the green. Well, one, Microsoft, not really an online advertiser.
Mhm.
Two, Microsoft, not really a chip. So Apple, same thing. Obviously, they're iPhones. So are they impacted? Chip shortages and stuff. Sure, they're users of that though. They're not making. Like they're not selling chips. They're not selling really online advertising. You may do a little bit of it, but it's not the meat and potatoes of the business. So you can see what the money managers are thinking. They're like, okay, well, if we're getting into a situation where the chips are going to be ugly and online advertising, which I'm still not totally on board with, but that's what the market is thinking here. Then what can we buy? So they're coming into those other stocks that maybe aren't directly impacted by this and buying them. Now, again, Apple, Microsoft going to report earnings here next week. So, and they've already I'm a little bit nervous on the Apple. I don't own the Microsoft anymore, but I think I'd be nervous on it as well, just for the simple reason that we had that headline come from Bloomberg on Apple that they were going to potentially, slow hiring, and same thing with Microsoft. So I don't know if that was out there just because they're nervous about the quarter. I don't know if maybe there was no truth to that headline, but Apple's had a hell of a run here. I mean,
definitely.
You're looking 130 to 155. The stock is not cheap. Say that again, chat. The stock, Apple, you can say, oh, it was 180, it's 155. It's cheap. It's not cheap. It's trading like 25 times earnings. Apple historically has traded like 12, 13, 14 times earnings. Then we had the ridiculous run, which was all multiple expansion. For some reason, they've given Apple a pass, and they haven't really contracted the multiple as much as they have in other names. That scares me. And it scares me to the point where I actually hedged some of my long-term Apple positions. So we know I had sold some of it back in 175. I actually just hedged myself on not on the entire position, but on like 2/3 of the remaining positions. So I've hedged myself by writing some calls and actually buying some puts as well. It's called a conversion. So I'm just nervous. So I don't want to go through the report and watch my Apple fall like 10, 15 bucks. I don't know if that's going to happen, but it's not out of the realm of possibility to happen. So we've had a big run here. So I actually hedged some of my Apple.
Can't blame you. I see a lot of resistance probably coming into play at the prior support, which was 160. We're still a little bit away from there at 155. Let's get towards Cleveland Cliff here. Let's take a look at some steel. I've been watching some steel stocks like NUE doing pretty well the last couple of days. That's what got me a little bit interested in watching this. Now you got the earnings coming out of Cleveland Cliff. Let's go to our 15-minute chart to see here. It's recovering after the earnings hit the tape here. Q2 EPS actually missing here at $1.13, missing the $1.32 estimate. Sales beat here at $6.3 billion, beating the $6.15 billion estimate. And Cleveland Cliff, is it time for steel?
I don't know, but I can tell you that Cleveland Cliffs has just been rocked and killed. And this was actually a pretty decent report, and the stock's getting hit on it as well. It's come back off the lows. You can say, oh, they missed estimates, $1.31 versus $1.32. But the sales were there. They knocked this thing down like 7-8% here this morning. And I was like, really? Really? I'm like, they're still $1.31 in the quarter. I mean, this thing's just making so much money right now. But again, this is a value trap because it's cyclical. So those earnings aren't going to just continue in perpetuity for this, because the thing would be trading with a PE of like 3. And if you look at it, you're like, how can I go wrong? Well, because the earnings are cyclical, and they'll get to a point where there's sometimes the earnings actually are losing money. So it's really got killed. A lot of bad news into a stock like Cleveland Cliffs, just like, Nucor, same thing. I mean, that stock went from $180, which, unbelievably, I sold part of my position the day before the big move up there, but like at 170 and change. And it kissed $100 back on July the 5th. $100.12. Wow. Now it's back up to 128. So now it's starting to get back up there again. You start thinking, it's kind of run here now in the last week and a half. But, you can put all these U.S. steel, same thing, starting to come back to a certain extent here. I don't know. I'm like, part of me wants to like look at this and say, buy this dip. And then part of me thinks, well, if we do go into recession, these cyclical companies that are killing it right now are going to be struggling 6 months from now. So that's why I don't know if I want to get my exposures to the commodities here, to the steel.
Yeah, and if you take a look at stock like X, it's already ran about 20% also in the last week or so. And so just be careful with stocks that have run prior to the kind of where we're at now.
And Mitch, it's a great point you're making. I mean, so many people, I saw this on CNBC yesterday, you know, the market's trading up here. We're almost 4,000. Is it safe to buy now? I'm like, what? I'm like, what are you guys doing to your viewers? You're telling them to buy now? We just ran 8% in a week in a bear market. I'm like, if you're trading, this is almost the sell signal. We were talking about S&P 4,000. That's what we were talking about a week ago, saying when we started to show some life, I'm like, I think there is room to 4,000. Well, we kissed it yesterday. That's the target. This is like the time to start ringing the register on some of these names. Like, I'm not going and liquidating my long-term portfolio, moving 100% to cash again. But I mean, stocks that you've been buying for the last couple of weeks because we've been fully on the bull train here on pre-market prep, I'm like, I think if you've got them on for swing trades, I think it's time to start ringing the register. I mean, my Square, I bought that 6 days ago at 63. It's 76 this morning. You know, it gets up into the 80s. It's like, okay, it just ran 20% in 7 days. I'm like, it's hard not to take that gain.
Yeah, especially in this market, right? I mean, how many 20, 30% gainers do you have in your positions this year? There's not going to be many.
I mean, and here we are, and people are starting like, okay, well, the moving average is starting to turn, or, you know, and I'm not picking on moving average, but I'm just saying there's a lot of traders that have been waiting for some signals. They might start to get those signals where stocks just look up, and then they pull the rug out from under it again. We're still got to go out and look farther. And if you look in the last week and a half, you're like, wow, stocks are strong, and they surely are. Look at that Square weekly chart, and look at the monthly chart. And, you know, the thing was $300 and then just rocked. There's pain everywhere in the stock still. Yeah. Does that mean it can't rip higher? It could. It was very oversold. And the only reason I started buying stuff was because I felt like we had turned a little bit. I feel like we still hit peak inflation last month. I feel like the next CPI report could be okay. But we're still going to go into an earnings season where, hey, you know, they can keep shrugging off, you know, some of these bad earnings. But I mean, at a certain point in time, if you get a couple of mega caps, if you had Apple or Microsoft say what Seagate said, or say what Snap did yesterday, the market is going to implode and be down 1,000 points. So, you know, Tesla, you know, was just good enough, and that's good, and it really ran. And I mean, impressive move for Tesla, and that's good too. Next week is going to be the tell. What are these tech earnings what are these big tech caps, big mega caps going to say? Because right now, I don't like what was said by Micron, you know, even towards the end of last quarter. I don't like anything about Seagate or Snap. And does that mean that it's just a chip thing, or it's just online advertising? Maybe it was just TikTok. That's possible. But it also might mean that, hey, maybe consumers aren't as strong as we think they are.
Yeah, let's go and let's continue going. Let's go to the next earnings stock here. It's a Slumberjay or Slumburger, whichever one you want to call it.
We like Slumburger.
Let's get into it. Let's take a look
Kramer
here.
Calls it Slumburger now too. He said that on the show the other day. It's like Slumburger. What we call this? And I was like, that's what me and Joel call it all the time. Slumburger.
You know, he likes to watch us in the morning and then come on CNBC, you know. But EPS here at 50 cents, beating the 39-cent estimate. Sales were at 6.7 billion, beating the 6.14 billion estimate. Let's go towards the 15-minute here to see some of the pre-market action. And you can see it's holding up the gains there.
The oil earnings are still going to be excellent. And it's almost like, seems like there's no such thing as a no-brainer, but holding some of these oil stocks into earnings when they've been beaten up because of oil coming down, it's kind of logical that the earnings were still going to be good. So I think that applies to almost all the oil stocks for this earnings season, is that I think the earnings are going to be pretty good. The response to that will be interesting. I mean, does it hold up? You know, you never know. I mean, I believe Halliburton earnings were actually pretty good too. If I just go grab it from the pro, I'll grab it right now. HAL, because we got them, and they're the direct competitor with Schlumberger, so it's a nice comparison. Yeah, Halliburton beat. Those earnings were pretty good too, and the stock was actually trading slightly higher on it, and then they pulled the rug out from under it. So I'd be careful chasing on these earnings reports, but on the print, it's not surprising that, you know, it's rallying up, because we know these news algos, simplistic news algo says, oh, beat, buy, and sometimes there's some opportunities there. So I don't think I'm chasing it here. Again, still, you know, looking at what oil prices are doing will dictate the moves for SLB, HIL in the longer term. But in the short term, they get these little, you know, price gyrations off their own individual earnings reports. I see them more as fade opportunities as opposed to chasing opportunities.
I'll point to 35 being the important level to watch today. You can see how it rejected it in the pre-market. We'll look to see if it can get above that. You got a bunch of daily levels, and it's also was kind of support here. Now going to play as resistance on the chart. It already played resistance over here twice. You see here at 35.22 where you just tick above it, and you see 34.93 level there. So 35 is the level to watch today. If that could break, maybe you get a little bit upside above that. But like always, just be careful because we have been seeing a lot of bull traps in this type of market where you get a little quick spike out the gates. And like always, right out
And
the
then they pull
gates.
the rug. We have seen that
Exactly.
too.
High volatility right out the gates. So just
It's
be careful.
just not the market to chase anything in. Like
Mhm.
if you're shorting stocks that are down 7%, buying stocks that are up 7%, you're kind of doing it backwards. The fade trade has continued to work in 2022, going both directions. So as much as buy the dip is working, the sell the rip is still working in certain stocks as well. I mean, and maybe we should talk about AT&T and Verizon because holy mackerel, that move in AT&T yesterday was a jaw dropper off the hop. I mean, like, boom, they opened that thing down and then they hammered it down another buck. And I mean, this is not some, high flying growth tech stock. This is a widely held, conservative, low beta dividend name. And they absolutely hammered it yesterday. And then we get Verizon following suit here today. Mitch, maybe go to the pro, give us those Verizon numbers because holy mackerel, all of a sudden these two stocks look like a disaster.
Got you. Let's go towards that one. Let's go towards it. Here you guys see the numbers rolling into the bottom. I'll pull off Slum here and put our earnings graphic back up there. Boom. All right, let's get to those numbers. I can read them now. You got Verizon Communication here coming in at a Q2 adjusted EPS, missing the estimate of $1.31, or the estimate's $1.32. They came in at $1.31. Sales at $33.8 billion, beating the 33.7 $7 billion estimate. Verizon did cut fiscal year 2022 adjusted EPS guidance from $5.40 in a range at the high range of $5.55 to $5.10 with the high range of $5.25. So cutting the estimate there on the EPS and taking the hit.
Okay, so when you are in an inflationary environment where inflation is running at 9%, and you're in an environment where interest rates and the risk-free rate is climbing very, very quickly as we've seen in 30 years, owning high dividend stocks that have low growth or no growth or slowing growth or declining growth is not the recipe for success. So if you're coming in and saying, look, I get a 5% dividend in Verizon, or I get a 5% dividend in AT&T, you're losing, right to the inflation right now. And the risk-free rate is approaching, on certain instruments. I was looking actually in Canada here, 1-year GIC, which is a guaranteed investment certificate by the government of Canada, is running at 4.1% posted. So you can probably negotiate those rates. So you get like 4.5% risk-free right now. And maybe it's not that high in the US, but it keeps climbing. And as they continue to raise rates, that's going to continue to climb. So you can go 4.5% risk-free, or you can throw an AT&T and try to pick up an extra point and have all this risk of yesterday's debacle. So here's the note, is that when you're focused in just low growth dividend stocks, you don't want to own those stocks in a high inflationary environment. And that's why I was so shocked at for how long like the XLU was holding up, and the consumer staples, were just being forgiven and they were the place to hide. And AT&T and Verizon were running up, and it just didn't make any sense. It's coming to roost here now. AT&T and Verizon, I hated AT&T. If you've listened to this show, I've hated AT&T for a decade. I'm not going to get off the hating AT&T bandwagon. Sorry, Richard. It's just not the stock to own in this environment. I think AT&T and Verizon can go much lower. I think these are businesses that are in secular decline. I think there are cord-cutting problems here. And I just think, they got the cell phone business, which is good, but there's competition all over the place there too. So I'm just of the opinion that there's a lot better places for your money than trying to go in AT&T and pick up almost a 6% dividend. You're like, wow, 6%. Wow, 6% is like wow in a 1% inflationary environment. When you're in a 9% inflationary environment, that 6% dividend is not nearly as attractive. So I'm out. AT&T and Verizon, don't like either of them. T-Mobile was getting hit on this news, and it's getting hit again here this morning. I throw it in the same group. I don't want to own that stock either, although it's not like it's a little more of a grower and not a dividend play. But I'd stay away from all that stuff. Even the higher dividend stocks like utilities. I've been hating on the utilities on the show for a couple of months. Early to it, I was probably hating on the utilities XLU when it was like 70. Then it ran to 76. Now it's coming all the way back down to 68. I think the utilities can go much lower. So I would stay away from, you're going for 3-4% dividends. XLU 2.96% dividend, not a hell of a lot of growth in there. I'm staying away from all of them.
Yeah, this is a communication services sector outlook, an index that I have from TC 2000, and you can see how it's heading down towards those lows and continues to push down. And yesterday I saw this sector being really weak. I'm sure the Verizon number is not going to help it today. So this is, for me, a sector to kind of avoid right now, the communication services. We'll see what happens there. All right, let's get out of that one. There's still one more earnings we wanted to cover. Let's go back to American Express here. I want to touch American Express,
Great report.
Let's talk about that one. This one actually coming in on the green side, right? We talked a lot about the negatives. Let's get into American Express here. EPS beating at $2.57, beating the $2.41 estimate. Sales at $13.39 billion, beating the $12.5 billion estimate. They also raised full year 2022 sales growth guidance from 18 to 20% on the high side, and they raised it up to 23 to 25% on the high side.
Though it's growing like crazy, and that's going to attract a lot of people. I think that's a gutsy call, especially considering that, we potentially might be going into a recession, but, they want to go for it. They're going for it, and it's going to help their stock here today. So American Express firing on all cylinders, doing everything right here. We will say that $199 down to $134 at, the trough there, which was just actually 6 trading sessions ago. So now, do I come in and chase? Just hit 134. Now it's 155. The stock is up 20 points on $130 stock. You're talking about a 16-17% move, lower beta issue in literally a week. So I can't chase it at this point in time. If I had a target, I'd say 160. So just looking at, the chart ballparking where you kind of had a lot of action going on. You're through the 150, which would have been an initial target, but you had the guts to hold it through the report. I think you're going for the 160, but just watch out for the rug pull.
Yeah, I'd point out a daily gap there. There's a daily gap right into that 160 range. So I could see that filling, and then you got to be careful because you could get a little bit of a pull after that 160. We'll see what happens here, American Express, and see if it fills that shadow up. Definitely a wick in the pre-market up there. Let's see if it can get back towards the 160 today.
Got it.
All right, getting out of American Express there. We've gone through a ton of earnings report here. Not looking too bad. In a second, we'll be joined by none other than the cow guy. I know you guys are excited about that.
We like the cow guy.
But let's talk a little bit about the situation that might come into play. And it's a lot of what some people were watching. They're watching, is oil coming back? Is the commodities coming back? So we're going to talk about the commodities a little bit here. So the UN-backed deal to resume exports of Ukrainian grain could be signed today by Russia. And if you look at, I'll just look at wheat overall. I don't have the futures here, but wheat is a wheat fund, an ETF, and you could see it definitely got affected here in the pre-market. And overall, take a look at this daily. It just doesn't look good here. Definitely just destruction here, and doesn't look like it's coming back.
I mean, we've come full circle here. So everybody thought, okay, well, we're going to have a food shortage here. We've got to come in here and we've got to buy things like wheat. That was just, obviously irrational exuberance from people buying WEAT from $8 to $12 in a week. And it's come back full circle. So I would say it's actually, got support here at $8. I mean, this is where we broke out from. If you often think the breakout point, when you come back full circle, you do bounce there the first time. So from a technical perspective, I'm not surprised. It bounced a couple days ago at $8. That's still the line. But with that being said, you obviously have turned. The tide has turned here. Do we start taking out, the prior resistance support trick? I don't know. I will say that we've come back full circle, though. So if you really think a food shortage is coming, now would be the time to strike. I don't think that's the case. I think all commodity prices have come in. I think everybody who was nervous about, the effects of what, the Ukraine situation was going to do on the rest of the world, and some people are still very nervous about that. But I think a lot of them have, been proven wrong because the stocks obviously, or because commodity prices have come way in. I don't know. WEAT, it's got some support here at 8, but wow, it's broken now. Trend is broken. Trend not your friend all of a sudden.
Yeah, no, when the trend's not your friend, I don't want to be fighting trends in this market, especially downside action when we, at least for me, we have some opportunities in some other areas to be looking for some gains. So I would stay away from this, but like always, up to you guys to determine what your outcome
It's okay
there
to
is.
fight the trend, just have your tight stops. So I would say if you want to buy WEAT, I'd probably stop myself 795, the low of the move from last week. Give yourself maybe like 750. 760, but starts going through there, and it's like, okay, clearly, the low hasn't held. Sometimes you gotta you can't just go 795. I'll put my stop at 794 because then it trades down to 785 and trades back up. You're like, wow, I got stopped out for a dime. You got to give yourself a little bit of room, especially in a more volatile environment. But I mean, if I can see the support where the resistance will become supported at $8, so I can see that there's an opportunity for a trade there, but you're fighting the trend. Next.
Yeah, I'm sorry. I'm just reading an email that I got from Scott. Looks like.
Oh, Scott can't make it?
Yeah, he can't make it.
No. The cow guy has never stood us up before. A cow guy standing us up?
He's not. I think it's gonna be my fault here. I didn't know that he had his own show and had to be out by the 28 minute. I guess we bring them on at 8:15. Yeah, we normally bring on all our guests at 8:35, except Mark.
No, we were looking so forward to Scott. Sorry, Scott.
Yeah, I was looking forward to him too. He's one of my favorite guests.
Guy. He's always dressed to impress. He's like the most well-dressed man. What's that ZZ Top song? Sharp Dressed Man. That is him. I wonder if he was a ZZ Top fan.
I'm a little upset because I really wanted to get into
my buddy Jeff is going to be just under his desk and hanging his head right now. He listens to the show all the time, and Scott's his favorite, so he's going to be so disappointed. Okay, we'll get you back, Scott. We'll get you back.
Yeah,
that's okay. I can talk for 23 minutes straight, so we'll be okay.
Right, so let's go to none other than Kathy Talk, Growth Talk.
You want to go talk some Kathy? I talk Kathy. What's she been
buying
lately?
You can talk Kathy.
I almost was going to unsubscribe from the emails because
I think you might have subscribed again, man. Do you think she's going to get to the point where she gets her buying shoes back on?
Maybe she'll get some some more money. So what did she buy yesterday? She bought KTOS. Just looking at yesterday's email, which I don't look at these things anymore.
That's a defensive stock. That thing likes to
She's been buying that thing for a long time. It's been a disaster, along with a lot of other her stocks. She bought some Teradyne. Wow, she's chasing Teradyne here. That's unlikely.
What's the ticker on Teradyne? I don't.
She's buying the rip there. Teradyne's chips.
Teradyne. Oh, it's TER.
Yeah, it's She bought, that's pretty much all she bought. I mean, she does like 3 trades. She used to do like 50 trades a day. She like 3 or 4 trades. All these little ones, I don't even know what that is. KMTUY. It's too many letters. When it's over 4 symbols, I don't look at it. BLI. She sold some of this one. Remember she was buying that BLI Berkeley Lights?
I see it here.
She's realizing some losses here on BLI. I guess she's buying that thing at 50, 40, 30, 20, 10. Now she's selling it at 5. That was not a good one. Sorry, Ken.
Yeah, it was like skills.
So, ARKK, I have been on the record and said I believe that the 2022 low is in. I'm still on the record saying that. I believe the 2022 low is in. Does that mean I'm chasing it here? It's kind of run. I mean, we're now up $36, $48. We've had a pretty good move. You naturally think it's going to stall out here around 50 to 52. So, some people say, oh, it's starting to look healthy. I would say we already caught this on the turn, and now it's starting to look like a ring the register opportunity here for me. I think there's more room to the upside. I think the Kathy names aren't done yet, but I'm not chasing at this point in time. Need another dip.
Yeah, let's keep going here. Let's get into some of these stocks that have been running ARKK. If you take a look, one of them has been Coin. That's been going back. I know she has a big position in Coin. If you take a look, Coin's actually been pretty strong the last couple of days.
Sold some of my Coin, which I'm realizing a loss on. This was one that I stuck in the long-term account and value trap central, and obviously been a disaster. It was one of the worst stocks that I bought. It was a half-size position. I wish now it's like a lot smaller size position. I sold half of the stock here. I believe it was yesterday. I believe it was the day before. It just came up so far, right around this price, around 75, 76 bucks. So I just think we've had a pretty good run. I still think Coinbase is not the stock for me. I think Coinbase actually ends up. It's moving with Bitcoin here right now. Obviously, these are all Bitcoin leveraged plays. So as Bitcoin moves up, this is going to move up here too. But I think there's going to be so many other problems with Coinbase to the company and I just because of so many other cryptocurrencies here that are just going to, I think, go to zero. So I don't think Bitcoin is going to zero. I don't think Ethereum is going to zero, but I think a lot of other ones are. And I just don't know. I mean, it's a bad taste in investors' mouth. This has been a nice snapback rally. And I think if you're sitting on losses, it's a chance to actually recoup some of those losses here. Could it move to 100? It's way oversold. It could go 70, 80. Could go to 100 next week. I mean, these stock is crazy. But I think this is more of a selling opportunity as opposed to a buying opportunity.
Yeah, it's something to watch. I know there was that insider talk, but I mean, the guy left the company now, so it's something to watch. I don't know how the Bitcoin situation is going to be, but if we're going to be in a prolonged crypto winter, I don't know if coin's the one that I want to be going for.
That's what I'm saying too. And even if we're coming out of it, I'm not sure coin is the one I want to be in. So,
exactly. So I would say the same thing.
If you want to be bullish Bitcoin, buy Bitcoin. I think a lot of these derivative plays and a lot of these stocks, I mean, they've had big moves. And Spinner was talking about Mara. I mean, holy.
Yeah, Mara's been an absolute
And again,
monster.
if you bought this thing at 50 or 60 or 80, you're probably like, oh, it's 13 whoop-de-doo-dah a day. But the people that bought it at 5 and 6 last week at 13, we're talking about stock doubled here in 1, 2, 3, 4, 5, 6, 7 trading sessions. So it's been a big move. Can it continue? Yeah, but I think you're going to start to run into problems around 15, kind of where we broke down from in May. I just don't think it's easy sledding from here. So I think we've had the snapback, short squeeze rally and Riot, Mara. Hive, I sold my Hive. I'm completely out of Hive. Sold it 2 days ago as well. Obviously, we did really well with this one in 2020. Love Frank Holmes. I think he's a good guy. I think he's running a good business, but it's a derivative play off of Bitcoin. And I just... I'm done with it. So maybe I'm selling the bottom. Maybe Hive's eventually going back to $12 or $13, but it's rallied here substantially in the last week, and I'm eating some of those losses and moving on.
All right, another big stock that's been leading it's a lot of biotech also in ARKK. I know a lot of people are looking at some tech names, but a lot of it has been held up by some of these biotechs. I'm going to call out some of these charts like CRISPR. I know that this was Mark Chaikin likes this one. He mentioned this one. Let's take a look at the daily. What do you see on this chart? Are you thinking that some biotechs are going to continue pushing? I mean, this has been a big move.
They were way oversold too. And full disclosure, I am long the XBI. I think there's room, but again, the easy money has now been made. XBI, $62 1 month ago, 84. So it's 22 points on a 62. It's almost a 30% run in a month. This is a big bull move. Like this is a 30% move is an impressive move. So, I mean, if you're coming saying, oh, this XBI, this is the time to get in. Well, you just missed out on 30%. So I don't think it's as easy sledding as it's going to be. Full disclosure, I'm still long. I think there's room to 90. I think it's going to be tougher after that. I do like the consolidation around 80. I do think it could go higher. I think CRISPR could go higher here too. But if you're lucky enough to buy this in the next month and you're sitting on a 20, 25, 30% gain, I think it's, it wouldn't be bad to take some chips off the table.
Yeah, another one that's been running is Beam Therapeutics. Look at this one. That's been a monster move from the bottom there.
Wow. What a move.
Look at that, 131%.
Yeah, in a month.
That's ARKK. Folks. That can lead ARKK. A stock goes 100%. That's going to help it out.
Is she got that one?
Yes.
She owns that one?
Yes, and
there's
Fate
one.
also.
Well, I don't know if it's a winner for it yet, but it's a winner in the last month. All these stocks were just massively 100%. Oversold and hated, and a lot of these companies, have been they're just oversold. So this is, what you call just a bear market rally, and a lot of these stocks. Still, the overall trend on a lot of these things is down. I mean, you just bring up Fate. The things went from 120 to 20, 120 to 20. So now it's up to 33. But again, there's just so many people who are bag holding this thing. Oh, is this going back to 50, 60, $100 again? Not unless it gets taken over. And I'm not saying it's getting taken over. It was a bit of a joke, but.
All right, we're getting questions on Roku in the chat from ARKK. Roku's actually, it's in an interesting pattern here. It's kind of a descending wedge, but just keeps holding in it. Tried to peak above it here in the 95s. I would want to see it close at the 100. That would show me that, hey, it doesn't want to be in the bearish trend anymore, trying to push back up. But it's an interesting chart. The outlook there, I just don't know. I don't hear anything new coming from Roku.
It's Netflix. I mean, obviously we had the Netflix report, which was good enough. A lot of people saying, oh, it was a terrible report, but it was good enough because the expectations were just in the gutter. So Netflix has been running here since the report. I mean, and into the report and since the report. It's a tidy little 50-point run for Netflix. Full disclosure, I'm still on my Netflix. Roku obviously lifting off of Netflix as well. It does look like it wants to try to break out over 100. That's the key critical level for it. I mean, we're going to get Disney's later in the earnings season. I don't know when Roku's scheduled to report, but that's going to be a wild card too, is their own earnings. Maybe you can look that up.
Let me take that up right now. I got you.
But you got major technical resistance on $100. It's down here this morning. I don't know if this is just an overall
6 days from now on the 28th.
Only 6 days from
Thursday.
now. Hard to start betting technically when stocks are reporting earnings in 6 days. Sometimes you get the run up. And in normal markets, I like to be long stocks that are reporting. We're going to talk about this. We're going to have an August educational event. I teased it a couple of times here. We haven't officially announced it yet. But we're going to have an August educational event where we're going to talk about swing trading. We're going to talk about different things. I'm going to be mentioning, the alpha extract from being long stocks into reports. That's a normal market environment. So if it does report in 6 days, there tends to be a positive tendency for those stocks to move up ahead of the report. But in a bear market, sometimes can move the opposite. People are nervous ahead of the report, and they sometimes sell them off ahead of the reports. So, it all depends on the type of market that you're in. But let's get back to Roku. It needs to get above $100, but you almost can't make a technical call when it's going to report in 6 days.
Yeah, it's really difficult to call that. Let's go to the shop.
They've been asking for shop. Pablo has been hot on us, and he's been on Talk Shop for a long time.
It was my best trade, not yesterday, but the day before. I wrote it up on that one, on the that big candle that you got on Wednesday. But it was a really good trade coming out of the 35 zone. Now it's getting towards the resistance of 40. That's the level that I'd point to. Need to get above there. You see a couple wicks now. Let's go towards a 15-minute, see the pre-market action, see a little bit of a pullback, holding around the 39s. What do you think about shop, Dennis?
We talked about this about 3 days ago when it was 34, and the stock, obviously, I was just saying this 30 is like, you don't get support levels like this. This was just an enormous support level. So, you had low risk, take a shot at 30, 31, 32, 33. Then it starts getting away from a 34, and then it's like, it can run, but now my risk reward isn't there because, now you're trying to break out over 40, but again, as much as that 30 was support, this 40 is epic resistance. So you're in this complete channel here. Sometimes stocks just trade in a channel for a long time. So it's hard to come in here and buy it now at resistance. You need to see it get up. Could Shopify break out? It's still massively oversold. I mean, you look at Shopify, it was a $176 stock down to 30. Could it go from 30 to 50? It could. It's got some momentum. It might break through here. It's down here this morning just because overall tech has been selling off and growth tech is down. But you do have massive resistance at 40, and you got to respect that resistance. If I had bought it at 31, I'd probably ring the register at 40. If it can start getting up to 41, 42, then you start thinking about 50. But the first test is going to be this 40.
Yeah, I think you'll get a pullback. I'd actually be looking for a little bit of inside day coming into play, right? And so
that can happen.
I'd look for an inside day, not taking out yesterday's low, kind of hang out, then maybe take out the 40s. I wanted to see it hang out here at the top of the range for a little bit before I think that, we have some extreme legs going. Because a pullback to 36, I don't think anybody wants to hold and get in here at 39 and watch it get to 36 real quick. So I think you just have to wait a day or two to see how it plays here. And also the overall market, let's just be honest. If the cues kind of flip on us, then it's going to be a whole nother world.
And that's the problem. With the mega cast reporting next week, it's going to drive everything. So, you got to look at who is driving your bus. Whenever you're putting on trades, it's like, who's the bus driver? Yesterday, the bus driver was Seagate, and the bus driver was Snap, which we predicted Snap was the big bus driver.
Well, earlier in the day, let's talk about intraday yesterday. I think that was Tesla that was the driver of the rally.
And I mean, this is a big thing for me. I look to who's leading, what's leading, where is it? And Tesla was driving the bus completely yesterday. I mean, the market was trading down in the red and they had none of it. And then we turned around and started buying stocks, and Tesla was your leader. It started going up on its earnings report and it did not look back. It's up another $13. So Tesla trying to drive the bus higher here right now because its report, just as Netflix, was good enough. I don't think Tesla was a fabulous report, but I think it was a pretty good report. Netflix was just, the expectations were much lower, so it was just simply good enough. But, Snapchat trying to derail the bus to a certain extent overnight, along with Seagate. Now, Tesla's trying to bring it back on the road, up another 13. You're seeing some of the mega caps to trade higher. But next week, the bus driver is going to change. And I mean, maybe you want to go in to just previewing next week here, Mitch, because obviously we are into Friday's show here, and we are going to get a lot of big names reporting next week here. So just go grab them from the pro. I can grab them as well. But we'll start with Monday. On Monday, which I'm just going to go grab here right now.
Right now, you got there's a lot on Monday here. I'm seeing.
Well, Monday's easy.
Names.
So Monday's NXPI.
NEM.
Yeah.
You got Newmont.
Those aren't bus drivers, though. So we're going to go to Tuesday. Monday and Fridays are usually light earnings days. Tuesday, where the bus is going to start getting driven by other stocks. Look at Tuesday. Google, Microsoft. You can go Visa, but Google and Microsoft are your bus drivers on Tuesday. And then you go to Wednesday. Who's your bus drivers on Wednesday? You got Shopify. You got Qualcomm. You got Boeing, Ford. But Meta is probably your bus driver on Wednesday. And then Thursday, Katie bar the door. This is a huge earnings day, like the biggest day maybe of earnings season. You're getting Apple and Amazon reporting on the same day. Apple, Amazon, then you get Intel, and Roku's going to report, as you already said, Mitch. I mean, you've got major bus drivers coming next week. So look to Tuesday, to Microsoft, and obviously to Google as your bus drivers on Tuesday, and then Apple and Amazon on Thursday. That is all that is going to matter.
And of course, the Fed, right?
When is the next one? So when is
Wednesday?
the Fed?
Wednesday.
So we
Wednesday,
get the Fed,
27th.
and then we get Meta.
Yeah, it's going to be a crazy day on that Wednesday to see what happens. And I'm also keeping watch on another interesting conversation, which is, of course, it's the euro against the dollar, right? I can take a look at this with Benzinga Pro. And what do you think about this situation? How do you feel it'll affect trading?
Again, I'm going to tell you.
Strong dollar, weak dollar.
The currency traders absolutely hate it when I say this, but what affects currency more than anything is, are we on a risk on market or a risk off market? Because when we are risk off market, they fly to the US dollar. It's not a coincidence, folks, that the US dollar has been selling off here over the course of the last couple of days, or a couple, in the last week. It's not a coincidence, because this is, been a risk on market for the last week. But I mean, you can look at it, the euro, you can look at it versus different things. The US dollar overall has been epically strong in 2022, and that is because US stock market has been weak. So it's just a flight to quality. So, if you're making a prediction on currencies, you got to be watching the equity markets here. Right now, risk on market, US dollar starting to show a little bit, like not a ton. Like, I mean, if you can, you may want to just bring up the UUP as a better indicator, because then you can see it against everything, Mitch. You can see we've come off the highs. But look, if you want to see the relationship here, S&P, look at the low. We were July 14th, 371. Look at UUP. Look what it did. July 14th, same exact day, tops out at 29.20 and then reverses. Don't tell me there's not an inverse relationship between the UUP and the spot, because there is. So, I mean, this is, as you're a currency trader and you say, I only trade currency, I don't care about stocks, you should start caring about stocks, because stocks will dictate what the currency is doing. People say the reverse, chicken or egg. They say, no, it's the dollar leading the markets. I'm going to tell you, you're wrong. It's the markets that lead, and then the dollar becomes a source of safety if we're in weak markets, or a source of selling to raise capital to get it into the markets if we're in a risk on market. So either way, there's an inverse relationship between the UUP and the SPY.
Something to keep watch. We'll see how that definitely affects equities, and to see if the dollar continues to push, how it affects the euro, how does it affect European countries, and it's definitely changed it up. I'll tell you one thing, I'm finally considering going to Europe to travel, But who knows, Dennis? Maybe we take a trip out there. What do you say, Dennis?
I'm all for trips. I mean, Joel takes trips here all over the place.
Right?
He's in northern Michigan, enjoying. He sends me a video. He's in the waves. I hope we don't get. I guess there's no sharks in Lake Michigan, but all these shark attacks on the other coast here, man. I was like, I don't even know if I go in the water anywhere right now. But Joel gets to go on these vacations. Me and you, Mitch, we need more vacations. Me and you stuck here. I enjoy the show. I enjoy talking to everybody in the chat, but I'd like to go and surf some waves in northern Michigan.
Gotta run this from London. Gotta run this from Germany. Let's do it. All right. And Tim Kloss in the Swiss Alps, but we won't talk about
Tim
that.
is at a whole nother level of travel, man. That guy. When we come back in our next life, we all want to come back as Tim Kloss. That guy's living the dream, man. Tim, if you're listening, we love you, buddy.
Yeah, we definitely do. IQV here, mentioned by the chat. Someone wanted us to take a look at this chart. I don't even know about this one too much. I don't know if you've ever heard this company, Dennis.
I have.
Yeah.
I do trade it every once in a while. Did it report yesterday? I'm just looking at the candle there where it obviously opened very weak and then went strong. It looks like an earnings reversal. So without knowing anything about the company, that candle looks like an earnings reversal to me. It's funny how you can look at the technicals and you can actually derive the fundamentals from the technicals sometimes. It did report yesterday?
Oh, the technicals don't matter.
Oh, they do sometimes. They do. So you can get a lot of information.
Here, I'll give you those earnings from yesterday. They did 100%. And here were the earnings yesterday. It was a beat and a beat, of course. Then they beat by a little bit. Sales beating a little bit decent there. So yeah, definitely right there, Dennis. Rebounding off the earnings. Don't know why.
One thing to consider. And one thing to consider, and these are all lessons teaching tools here, is when you get these small cap stocks, you get these, stocks that aren't widely followed and they're trading on low volume on earnings, they can have wicked reversals because the money really hasn't spoken yet. You don't see this on a Snapchat because the money has spoken. The money has been trading actively. I mean, the volume on this thing is nothing short of incredible. It's already traded 19 million shares here this morning, and the stock hasn't even opened, and it has continued to leak. So we were talking about 1150 saying, I think I'd stay away from this one. It's fallen another 5% from when we just talked about this at the beginning of the show. So rewind the tape 57 minutes, 1150 to 1089. We just saved you 60 cents. Or if you were shorting it, congratulations, you just made 60 cents. You've got to stay, when you've got massive volume like that, the money has already spoken. So it's hard for that to just reverse. So don't expect a reversal now. You get these low volume names that are trading like on 1,000 shares. It's trading down $10 on 1,000 shares. It can totally reverse because no money has spoken. There's no memory in that yet. When you get the money and the volume in it, that's where it's hard for the trade to reverse.
I'll tell you what, this IQV, it just helps me and points me that I did see one area that had relative strength yesterday. It was diagnostics and research. Two stocks that got on my radar was TMO. Thermo Fisher, look at that move yesterday. Really good breakout there. And then DHR. So keep your eyes on these stocks to see if they continue
DHR is a Kramer favorite. He has been saying to buy this thing for a while. He was saying at 300, at 270, at 260.
Well, then now you're scaring me, Dennis. But
well, you know what, though? He's a Kramer favorite. He's actually probably back up in this trade now because he was buying it all the way down. So never frown average down. Going to work for Kramer on this one.
Yeah, TMO and diagnostics research was one of the strongest industries yesterday. So could have been why you also saw IQV kind of get that lift. We'll see what happens there. Let's take another stock from the chat. You see anything there?
We'll grab one more. Somebody's saying Snap is toxic. It absolutely is here today.
CELH mentioned multiple times. Just go towards it.
Celsius Holdings. Okay.
Celsius Holdings. This is the
you don't have a hell of
drink.
a lot of stocks making new monthly highs or new highs. I believe it's a new high on 2022. Yeah. Stock breaking out, making new highs for 2022. There you go. There's a source of strength. There's a nice uptrend for you.
Yeah.
You draw your channel lines, and as it pulls back here, you're probably buying on that support level. I mean, support's down here at 74, 75 now, but as it comes up, take my Jeff Mackey, hey Jeff, purple crayon, draw that on the line. And, if it pulls back to that line, buy it again. Kind of your moving average is kind of drawing the Jeff Mackey crayon, although the moving average isn't a perfectly straight line.
It's an energy drink. I just don't know. I don't have the
I need energy.
Insight.
Give me energy.
Yeah, it's a healthier energy drink. That's what they
healthy energy drinks. I like that too.
Yeah,
Have you
that's
ever
what they
tried
try
their
to do that
Celsius
one.
drinks? I've never tried anything from them.
Yeah, I've tried them. They're refreshing. I'll say
Oh,
that.
refreshing, but not that good. He means. That's a nice way of saying that's
They don't have the
refreshing.
most. They don't have the most
It's
in
like
the
this isn't
caffeine.
awesome. This is
You know.
refreshing.
Yeah, it's not my favorite. Let's put it this way, but I'm sure the chat's gonna hate me for it. I'll hear about it later.
GameStop.
This looks like to me one of those kind of Wall Street bets retail favorites. So just keep it on watch. It is doing well.
Well,
Let's go to the
Wall Street
GameStop.
bets and retail favorites. We should talk GameStop here. GME.
Let's go.
We have split
on.
still.
And you
the
needed to
split
get
officially
in.
has taken place.
I talked about this Monday.
So don't worry, folks. You're not down 80% on your money. It actually is split because some of your brokerages don't adjust very quickly. The adjusted closing price is $38.3675. So $38.37 if you round it. Its stock is trading down 80 cents here right now. We know from historical perspective, I will talk about this in our educational event now, that stocks tend to be strong ahead of their splits and weak after their splits. That is holding true this morning because GameStop is already trading down 2% here at $37. I have no idea why they split this stock other than financial engineering and trying to say something cool and get the stock price to go higher, which it absolutely did for a bet. Does some of that fluff come out of it? Maybe. But you can't talk negatively about GameStop because I have 100 messages of people who hate me.
Well, we'll let you know that we can at least mention what Wedbush says.
We can mention
so Wedbush
what's
here
Wedbush
says,
say?
They say maintain underperform on GameStop and adjusted price target to $7.50.
Wedbush, you're going to get hate mail for this one, man. Who's the
Wedbush,
analyst? He's going to get hate mail. Who is the analyst?
I gotta look it up. I just saw it hitting the tape there. I'll see what happens. I gotta look into the report. I hope it's not Pactor either.
We love Pactor. We hope it's not Pactor.
As you guys can see, GME definitely getting that downside on at least the price target outlook.
I'm going into the pro. I got to know who the analyst was.
Yeah, you could take a look there. I'll take a look at how AMC has been doing because it's been performing well with GME. Now does it turn around? It was a hard turnaround there at the 18s. I've been looking to see if AMC was going to get up to 20. That hard top gets me a little bit more concerned that we don't have the strength to get back through the 18 level and get to 20. So I'm starting to see a little bit of a turnaround there. Did you get the analyst for us?
No, I'm looking still here.
All right,
too.
no worries.
So many ratings here today, and then your pro headline it just says Wedbush. Doesn't say who the. Oh no, it is Pactor. Oh my gosh, it is.
Oh, it's Pactor.
Oh, it's Pactor.
We're gonna have to get him on next week.
Oh,
stay tuned, guys. Stay tuned, guys.
He knows. Michael knows.
We will
get some hate mail on this one. He knows.
We'll get Pactor on to speak all about this kind of price target on GME. We'll get him on for that. Now, this upgrading.
He was the first ever analyst to come on this show like 8 years ago. He's been coming on this show regularly for 8 years. We love you, Michael Pactor, but you got to heed the warnings. When you say something negative about GameStop, the hate mail comes.
Now, when you look at CNK, look at how that upgrade affected that stock. That was on Monday. Look at that.
Gap and go, Mitch. You don't see a lot of gap.
I played this play. I made a good trade on that one. A lot of that was seeing the sympathy and trading relationships, right? And so it was not a bad move at all the last couple of days. I think it's too extended now. I think if you're coming in on CNK now, you're doing it wrong, right? So we'll see if this one can pull back now. If you see CNK pull back, also just take a look to see if AMC pulls back also. I think what you might see is them both wash out together here. But CNK's made a big move up.
$20 logical stopping point. Optionality will be there. I mean, and you've had the gap and go from 1750. So impressive move here for CNK. Maybe Top Gun driven to a certain extent. I don't know. Like if Top Gun's got everybody excited. I haven't seen it. Have you seen it?
Overall, no, I didn't see Top Gun, but overall, what it is that the box offices are not at least nowhere near what they were in the pandemic, right? Some of the volume's back. It's not all of it yet, but definitely showing at least that I think the movie theaters will survive. Remember, there was a question for a little bit there. Would they go away? They're surviving for sure.
No, they're doing pretty good. I mean, again, valuation, and we can't talk AMC or GME, but valuation on the stock not to be named is still extreme, but it's had a good move as well.
Something to keep on watch. Last one I'll touch is XLF. That's an interesting one that was mentioned in the chat by RSP. I got you. Let's go ahead. Let's touch it. What do you feel about financials here?
Well, the one thing to consider when you're trading the XLF is remember the biggest holding is Berkshire Hathaway, which is not really a financial. So it does throw you out every once in a while. So what that actually does is lowers the beta on
This is
this
why I
versus
don't
the
like
banks.
using the ETF so much, Dennis,
You got to
because
know what's in
the
it.
weighted,
You got to look what's under the hood.
factors.
Yeah,
Yeah,
you got
there's too many people will say like, oh, XLF is up, so all financials should be up. But I mean, that could sometimes not be true if, let's say, Burke was leading it up big. And so that's why I like to use more indexes that have everything and not so weighted. But yes,
you got to know what's in your ETF.
you have to know.
But it's widely traded. I trade XLF almost every single day. It's widely traded. Just know there's some Burke in there. TLT trading higher here. So with TLT trading higher, expect the banks to be weaker. We'll have to see, if that holds true. Obviously, relationships don't have to hold true every single day, but we know overall when the TLT is up, banks are typically down. You are seeing that in the pre-market. That might change in the regular session. It kind of feels like value stocks are trying to catch a bid, which could maybe trump the fact that the TLT is higher. I think that's why the banks aren't trading down very much here. Burke is trading in the green, which is helping the XLF. But obviously, the biggest holding Burke, but then you got a ton of banks in there too. So a little bit weaker here this morning because the banks are trading down. Let's see if that weakness holds.
All right, we'll see if the SPY can hold the rally. My area to watch is going to be 401.50. Reason why is we'll fill in the gap completely. You can see the low here on this candle is 401.44. So maybe you get right underneath that 401.50. But that's the level that I'm pointing towards where resistance I feel will come into play here at 400. Is really close. We'll see what happens today. Do we close into the green or red? It's going to be definitely something to watch. Dennis, any last comments before you get on out of here?
Just very impressed with the resilience of this market. I mean, you get Seagate hammered to the tune of 10%. You get Snap hammered to the tune of 32% here now. You get Meta trading down 5%, Google trading down 2.5%. You think it's going to be a disaster for the market. Nope. We're trying to hold up. Buy the dip mentality is still there on other stocks. Other sectors are trying to pick up the slack. Consumer staples showing a lot of strength here today. Oil stocks are showing a little bit of strength despite USO kind of being flat. You're seeing some value stocks show some strength. You're seeing healthcare show some strength. You're seeing obviously MasterCard, Visa off of American Express showing strength. So you are seeing pockets of strength here, which is helping SPY overall. IWM, which takes out most of your tech because obviously a lot of small caps, is trading in the green here this morning. So it's kind of a better feel for what the overall market is doing here this morning. But again, we've run quite a ways here. So I still think, as S&P 4000, we're approaching that SPY 400. I think if you've been, long and you're coming in here on swing trades, I think you're ringing, not necessarily ringing the register, but lightening up. I think I'm lightening up in this strength there.
Hey, we'll see what happens definitely in the market today. I think it's getting to the point where some stocks are extended, but will the rally continue? I don't think anyone knows into the market today. So like always, we're going to watch and react and try to be flexible as traders. Dennis, have a great weekend. Enjoy it.
too.
Have a good Friday. And we're going to go ahead and get Dennis on out of here. I'm going to continue going into All Access. All Access starts at 9:15. So you guys got a chance to tell me what stocks are on your radar today. Of course, I will go ahead and cover them here. Let's dive on in. One stock that I still have on the swing trade is Tilray. I will let you guys know I've been long. You guys probably saw it on my Twitter. I've been taking a swing trade on this one from the 350s. Going to continue to watch it today to see if we can get the lift. Yesterday we had sideways pullback area. I want to see this really start holding the high here around 369, 370. If it ticks down there, it's okay, but we don't want to see it break the 350s. We want to get it back above the $4 today and get it a nice push out. What is another one that I have? MSOS. My man Spencer would be happy that I took this one. U.S. Cannabis ETF. Got this one at 1162s. I'm looking for the resistance also to play in here and just hold that resistance on any pullback. You could see it here to the 1180s, 82s, holding that. Let's see if it gets into the 13 handle today. If we could get up there towards, let's say, 1350s, I don't mind taking 2 points out of MSOS. Potentially, you're hearing a lot of cannabis talk. We'll see what happens there. BTU being mentioned in the chat. I see you, Beach Bum. I got you. I'll take it on. Let's take a look here at BTU. Yesterday, I was actually thinking about taking a swing to the upside. Kind of glad I did not take that swing to the upside. It was hanging out here around the 21s, 2060s. I'm going to watch today to see if we can get that lift to come in here. Of course, you're seeing kind of that downgrade. Let's see if it can get back up. I need to see it get through the 21s, really strong. And so a lot of this is going to be dependent if we can actually look like we're getting some strength back. I don't want to be early to BTU. I want to be late to this move. And the reason why I want to be late is that we've had a lot of sideways action. It could trap us to the upside and then boom, pull back down. So really a close back above 23 is where I start getting bullish on these coal players. But you take a look at maybe AMR. I like the way that this one trades also. If you're into coal, look for this one maybe to recover also. And then CEIX has actually been the one holding up the most in coal. And that's one that you guys can keep on watch also. Let's keep going. Let's take a look at SAM, Boston Beer, coming down there towards 300. Can it find some support there? I don't know. It looks like they got some earnings, and it doesn't look like it was good earnings there. Looks like, let's see here. Yeah, it issued full year EPS guidance below analyst estimates. And if we take the earnings here, I'll show you right now. The EPS was at $4.31, nowhere near the estimate of $5.35. Sales were at 616, missing the 629 million estimate. So just miss and a miss there. So you guys can see it getting hit. It's probably going to go ahead and affect TAP. TAP has been holding on the most there in the Brewers. I don't think this one holds on after this report. You probably see a little down trace to the 55. We'll see what happens there. GLD reversing. Doesn't look like a bad one to kind of keep on watch. The big thing with this is usually this means a weaker dollar, right? If the dollar is going to continue getting stronger, I don't expect to see GLD getting on up there, but this has been really beaten down. You can take a look at GOLD there also, and you can see how beaten down this is. This is more down than it was when it came back and started rallying, right? And so to me, I think, yeah, they're super oversold, so you could get a bounce back. Look at AU. AU kind of leading our way today, actually. This one's interesting. I wouldn't trade this one to the upside, but I'd keep it on watch for me. If this one can continue, maybe it affects kind of the overall. You get GLD, you get GOLD to kind of push on up. Those are some that I'd keep on watch. Monday, you do get gold, Newmont Corporation to report before the bell. So maybe keep watch on how this report comes out on Monday to see how gold overall is going to react. That's what would be on my radar. All right, what other ones are being called out there? Triple BY. Okay, so this one is spiking a little bit here. Let's take a look at the 4-hour chart. 4-hour chart, we can see that we're getting into this gap zone, but the question is, will it fill it all the way up there? I'm not so certain that you get that fill there, but that's what I'd be watching. That's a move up there towards 650s. Today, I'd be watching to make sure that we could kind of hold back here on pullbacks towards around 560s, 550s. Wanted to kind of even, if it does a wick below this doesn't look too bad. 64, you get a wick there, and then you get a recovery of 570s to the 575 area. It has to hold there for me at least to keep this one in the bullish sense. And you can see on the 15-minute, you have what? A couple of tries to get through the resistance, right? And so that's what I'd be watching right now. You can see this on a 15-minute, up 1, down 1, up 2, down 2, up 3, down 3. I'd want it to hold that support at least from my rule of 3. So that's 560s. Any breakdown to the 560s below that, closing down here, I would be like, okay, no more looking at this on the upside. If it could pull back a little bit, maybe to the 565s, come back through 575s, that's where I'd be watching it for the upside action. All right, keep going here in the chat. What's up? What's up, guys? What do you guys want to check on out? I'm in overdrive here. Going to get you guys on over to All Access coming on up. We got some growth stocks that will be hitting All Access, and we'll keep on going here. Let's take a look at CrowdStrike getting mentioned in the chat. I got no problem, Keith. I see you. Let's take a look here. It's trying to get through that 190 area. Let's take a look at a daily. Daily has it really just kind of keeping this trend here. You can see here we're holding that trend, getting on back here into this levels. And you look here, I draw it from the peak here where you dropped off. You're looking to get back on up there. I think you go into the 190 handle here, but you're going to play into resistance. The question is, can you get to the daily 200 SMA, which is up there to 200? You're going to need some strength to play into it today, but doesn't look too bad here on CrowdStrike, trying to get through the 190s, take that next leg up to 192. What happened to live trading? Well, live trading usually takes a step back here for all access. What happens is normally I just end up continuing to trade like always. I'll be in the chat on all access. So if you want to continue to trade, there's nothing wrong. You guys can come talk in the chat on all access and we can stay active. It's just going to be where you're not looking at my screen here. But hey, like always, let's take a look and we'll see what happens into the market. Come trade with me on all access. I'll be there. All right, looks like it's 9:15. Last one I'll talk about because I started in the chat was Lucid. Lucid continuing to hold above the 2026. I talked about if it can get up there, it starts looking bullish. So keep your eyes on Tesla today. A good day from Tesla. I would expect a good day from Lucid. Yesterday, I was able to play Fisker to the 1020. I'm going to look for this one to continue. It's already up there towards the 1020. Same thing, if you continue to see Tesla strong, you can continue to see other stocks strong like Rivian. Also, those are auto manufacturers. Keep those on your radar. We'll see if they can continue to make runs. All right, that's going to do it for me. I hope that you guys enjoyed it. Appreciate you, George, in the chat, Pablo, and everybody that gives us love. Please smash the thumbs on up before we get on out of here. One thing that I've been struggling on is getting to those likes. So I appreciate you guys. If you guys can hit that like and get all this free information right here in the morning before you guys start your market, I'll get you guys over to All Access. Let's go ahead. Let's dive on in to some story stocks.